Hello, and welcome to another day of TA the Degen way. It's been a few days since we've had a chance to really hop on and take a look at the Bitcoin price and what we're looking at. And unfortunately, we are still stuck ranging sideways. So here we are on our TradingView ideas page, and our current trading plan for Bitcoin is to trade the range until it breaks. And here is our latest chart posted today, looking for a move to the downside. And let's just pull this up here. If you want to import this chart with these levels into your trading view, you can go to the share button and make it mine, and as long as you don't have too many charts saved, it should allow you to do so. And rather than look at it on this limited sheet here with the write-up on it, we will just jump right into the regular chart. And I mean, what do we have here? You know, price ranged here, price ranged here, and it is ranging here. And if we take this range, you know, our current range, and we split this up into equal sections, I've got it split into quarters, we will see that these levels are quite well respected, and I've even gone as far as I like to split these up into eighths as to where I expect, you know, price to see some kind of a reaction as price comes down to or up to a key level, looking for key reversal signals. Just trading the range. We're at the top of the range. Price broke above, took the liquidity above the high, broke down, and came back up and retested the high, said no, and came on down. And if we look at this, as price came down and broke below, you know, 50% of the range, as it comes back up and retests it, here we're on the 4-hour chart. I mean, what do we got? We got a big wick. You know, price came up and retested this, and, you know, there's a chance, you know, we could end up here and testing this, but as price comes up to these key levels and there's bearish signals, that's time to be looking for short trades to the bottom of the range. And you can see that we do have, I mean, kind of a makeshift head and shoulders per se. You know, price came down, broke back into this range, you know, and now as it's testing the top of it, we would be looking for a continued move to the downside, or possibly coming up to the 270275 range, and looking for some type of a bearish candlestick pattern on a smaller time frame. And if we pull up our oscillators, as we can see, this 4-hour oscillation has rolled to the upside and is rolling over to the downside, but we've already put in a significant move to the downside. And what we're looking for is for price to come down and put in a lower low, but a higher low on this oscillator, signaling that we'll have a bigger move to the upside, while that would be coming all the way down to you know, this eighth mark of the range here in the middle at about 26,500, 400 to 500 area. You can see it was resistance, so it was support, flipped into resistance, and we are currently holding it as support, but price could very easily come down below these wicks, grab the liquidity below the low, and come back on up, grab the liquidity above the high, and travel on down. Ideally, price would come down to the bottom of the range. You know, we can see this level here too, who is well respected right here as resistance. Price is trading in this range up here, came back down to here. So we're looking for bearish signals here that would take us down here. We've got this curvature in our oscillator, but we would, be expecting some kind of a bottom in here, and we did get one. And then we've got this wave. This could always continue on to the upside and reject up here, but this would be our first opportunity of entry for continuation. And if price comes down here, it while this momentum wave puts in a higher low, we could expect a decent move to the upside. Just looking at our chart, we are poised for some kind of a head and shoulders move potentially. If we come down here and bullishly bounce, we would be looking for price to be rejecting right here. We'd be looking for price to be rejecting here and rejecting here. And this would give us a nice structure for A, B, C move, or a 5-wave structure, 1, 2, 3, 4, and a 5, and then nice, I think we'll just see ABC, but then a nice move to the downside. Unless we can reclaim this level, then bullishly bounce, break above, and close. This is most likely going to be our resistance. And where is the bottom of this sideways range? Well, way down here. And the measured move, if we come down to the 26K area, and then we do pop up for this kind of a right shoulder, the measured move is going to be bringing us to the bottom of the range. And if you pull a head and shoulders target, it is going to have the entire world targeting a much larger move to the downside, which would be halfway into the range below, which very well may be a target. Maybe we come to the bottom of the range, we come up and test a quarter of our way up, and then we do head on down to this 23,700 area, come on up and retest this over some time, and come on down to the next massive level, which would be 23K, which is halfway between 1.5 and 2, expanding this range. And if you come over to our CryptoFile ideas page or one of our previous videos, we'll see this BTC macro volume levels. This chart is giving us key areas in a much larger range. Like this is a weekly chart. Here's our all-time high. Here's our 15K area low. This range is 100% and about 70 weeks long. This range is about 100%, and so far we're sitting at about 70 weeks. And if we look at this, just taking the key volume areas inside these ranges, our value area high for our current range on this weekly macro scale is about $23,000. So, if we want to remain bullish, we need price to bounce and move to the upside. But if we lose this 25K area, well, then we will see. But I mean, these are all areas where taking a decent swing trade is more than ideal, just by these very simple range trading principles. When price is at the top of the range, all that is where you look for short moves. Now it has moved down, so this is our range. At the bottom, at the 25K area, while we're looking for long moves, where, well, at least to the middle of this range, and at the middle of the range, 3/4 of the range, preferably the upper 3/4, we should be looking for a short position. So if we zoom into some of our current price action, we're on the 4-hour here. Do we have any bearish signals at this key level? of 50% of the range. We broke below it, and now we are retesting, you know, from the bottom side. Are we going to hold this, or are we going to lose this? We come down now to some of our smaller time frames. Let's go down to the hourly. Well, here we've got some hidden bearish divergence momentum. These two waves are equal in height, but we have a lower high. Price came up, it wicked, broke below with a major engulfing candle on the hourly, signaling that this was the top of this little mini range. And as such, we should expect price to come down. If we just look at just this little price range right here, it halfway across this range would be about here, you know, and then we got a bullish signal here, and then now we're traveling back up and putting in most likely a lower high. We can follow the curvature of this building itself out to the downside here. You know, this is the hourly. It marked out some key levels inside this little range, which I expect to be lost. And you know, as price has come up to this 50% mark, it has rejected it. And this line is probably a little low. I mean, it probably belongs more up here, or possibly down just a smidge, but we'll leave it where it's at. It's nice and balanced. What we are looking for is for price to come down here and come back up and retest the bottom side of this 50% mark. And when we get a engulfing candle or some bearish candle pattern here, looking for, you know, that would be the final signal, or the ultimate, you know, ideal signal of a move down lower. Because where is the bottom of this little range? Well, real close to this key level, so we could always still come down, grab the liquidity below, and then hopefully, you know, reject right in here. But, you know, we could come back up and trade in this range for a little while, which would be more bullish. But currently we're at the top of this little mini range, and the top of this mini range is the rejection point of the bottom side of halfway to, you know, down to the bottom of this larger range. So we should be expecting that we're rejecting on the bottom side, or getting bearish signals that price is likely to come down, which means it would be rejecting from the bottom side. We should expect a continuation down to the next quarter of the range, which is down here in this 26K area. It's about 2.5% from the current price. And we're looking at the hourly, and we're looking for bearish signals as price comes up and tests this key level. And right now we've got a nice A, B, C. Nice corrective move on this. You can see the curvature of this price action curling to the downside. It's got a nice curvature to it. You can kind of see this curving here, where we would expect, you know, price to come down, maybe grab the liquidity below the low, come up and retest and reject again, hopefully again, and come down here maybe to 26,690, and then come back up and retest this. And at that point, I mean, what would you have? I mean, why does a head and shoulders mean anything on the chart? You know, price is ranging sideways. This is a little range here. If we take this range and duplicate it to the top side, when price broke into this range up here, buyers said no. Price comes back into the range below, retests the top of it, and then if you have bearish signals there, you know, and reject, well, you've rejected this range above, you've been accepted back into this range, and rejecting off the top of it, the likely scenario is to travel to the bottom of the range. And then if we're going to remain bearish, retrace half, maybe a quarter to, you know, just not the entire range, anywhere, you know, from, you know, 50 to 75% of the range, and get a bearish pattern that breaks through the bottom of the range. And what pattern do you have on your chart when that actually occurs? Well, you have a head and shoulders. That's why a head and shoulders even means anything. It's because of what's going on in the price action. How is price responding to different levels in these ranges? You make a price range. Here's your left shoulder. You come back down halfway. Instead of coming all the way down to the bottom, you only come back halfway. Price goes up into the range above. It goes to pull back halfway and find support here, but rather than do that, now you're in your new price range. Price comes back into the old range, finds support at the last support level, comes back up and retests the top of the old range, and then continues on to the bottom. Being that is a bearish signal, well then now you have your support here. Price will break into the range below, retest, and being that this, you know, is signaling a top, you'll probably get a impulsive move, which would take you down, you know, one whole run, which is why you can get a head and shoulders. This here is a larger range, 50% of the range. You know, you could consider the bottom half of this range in the quarters. You probably see a little consolidation here. I mean, it's just the way that price arranges itself on the chart, and the way that the price action is corresponding and acting and reacting inside these ranges is how you can make, you know, any type of realistic projection as to where it may end up in the future. Just looking for bearish signals at these key levels within the range, you know. So it's like we're in this sideways range. The play should be to trade the range until it breaks. So the current trading plan, for myself anyways, is certainly not financial advice for yourself. This is more just analysis of price action on what's going on in the chart, and, you know, using simple, you know, range-based trading logic as to, you know, how price is likely to respond. And if, you know, so we're looking for rejection signals here, which I think we are receiving, and coming down to this 26K area, looking for bullish signals. We want this oscillator to be rounding over to the downside and starting to put in higher lows, signaling that price is likely to reverse to the upside with, you know, some bullish candlestick patterns, an engulfing candle, you know, or a big wick, you know, giving like a you know, like a hammer pattern on the candlestick, showing that, you know, price got bought up real quick, and, you know, there's lots of buyers, or say price wicks down into here, you know, it breaks into this bottom little consolidation range, and it wicks down here. Let's say it even wicks below the lows or something. Sellers are stopping, you know, they're taking profit. Short sellers, as price comes to support, and buyers are coming in to buy support, so you get that big wick. That's a bullish reversal signal at a key level, you know, looking to at least de-risk halfway across the trade, if not take some profit. It definitely takes some profit, and be looking for short trade, looking for a short trade. You know, when price gets to the top of this range, the long trade is pretty much over. I'm looking for a short trade that may only come down to here, take some profit, and then if we're coming up here, it gets stopped out at break even. Look for a bearish signal, take some profit, or, you know, look for a bearish signal on the oscillator, look for divergence, look for, you know, bearish candlestick pattern engulfing to the downside. You know, and you can even get down finer on some of these smaller time frames. If you're seeing the signal, you know, looking like it's, you know, price is starting to round over into your key level, or round over into your key level, or you have a break of trend there, or bullish divergence on your oscillators that are looking like you're going to print it, you know, on the hourly, the 4 hours way down or the 4 hours way up, you know, you can go down to your small time frames and look for the same signals. You know, I'm at a key level, the 4 hour looks ready, the hourly looks ready, and, you know, now I'm looking for that same candlestick pattern and divergence on an oscillator for entry signals. Stop loss right above that nice entry candle, and you know, that is range trading in a nutshell. Lots of information on the internet about how to trade the range. You hear a lot of people say trade the range until it breaks. Well, that's because price spends about 80% of its time ranging, but it's hard to define the concept of a range because this is a range. I mean, you know, what do you mean by a range? This is a range. But if we zoom out here a little bit, you know, this right here, you know, this whole chunk of price action from swing low to swing high, that's a range. What range are we talking about here? You know, this is, you know, a range. So it's like going to the higher time frames where these ranges are clearly delimited, you know. And you can see a very clear range here from the past. You know, here was resistance. Price came and broke above it. It consolidated a little bit and said no way, crashed back into the range, came back up, you know, retested some of this, came back down, came back up, retested it. You know, price tried to sit in this range twice, but every time the price came up here, it didn't last and just came back below. Eventually retested it, and once we retested the bottom of that range, well, then we got a nice drop to the downside. You know, you can see this was clear resistance, and it was clear resistance. Where is it clear support up here? You know, it's just not. Right here maybe. But when price came back up into this range the second time, well, where was our clear support? You know, at the top of this old range. And then when price broke below, we came back down in here to, or down here, where was our resistance? You know, well, at the top of the range. So we're ranging sideways, looking for a 2.5% move to the downside, maybe a 2 to 4% move to the upside, and then target the bottom of the range. And depending on what these oscillators do and just kind of how price action presents itself going forward, but these are high probability areas where you look for bullish and bearish signals. When price isn't trending, I mean, trading the range is really all that is available, and constantly looking for breakouts and swings is a good way to get chopped to death in, you know, some type of, you know, top chop or a bottom chop that people die a death of 1,000 cuts. Always looking for the breakout instead of fading that breakout and just trading the range. But if you like the content, review on the market, hit the like button, subscribe button. Maybe join us on TradingView under the Ideas page. You can just search for CryptoFile 622, or else there should be a link in the description of this video. Or even better, join us on Discord, where you can learn how to do some of this stuff yourself. There's 1,000 ways to trade the market. You know, from trading large ranges and swing trade style. You know, investing's easy. You just hit the buy button and extend your time horizon out long enough, and as long as you're, you know, not buying the top, you know, it'll probably work out eventually. And then there's scalping, which is 100% dependent on trading the range. and there's a lot of strategies inside. Come on over to our Discord, and we can talk about those things. But until then, trade well.